Bing bong. We are live with another edition of the State of Bitcoin podcast. But first, I'd like to thank my sponsor, Codl.co. That's CODL.co. And if you guys missed your opportunity to get 30% off with my promo code, don't worry. I still have a promo code for you. It's still Green Candle. That's lowercase GREENCANDLE for 10% off. I told you to get it before Cyber Monday, so hopefully you did and you capitalized on that opportunity, but I'm still getting some off for you. So if you need a punch plate or something along those lines, get your Bitcoin off exchanges and use one of these punch plates. 10% off, not a bad deal. So visit our friends at coddle.co. And I've got a very, very special guest for you. I got Jaran Mellerud, and if you're not following him on Twitter, he's probably one of the better Twitter follows as far as breaking down, Bitcoin miners, their balance sheet, and everything going on in this space. So we're gonna have a banger of a conversation. So, Jaran, how are you feeling today?
I'm feeling great. So thanks for having me. How are you feeling?
I'm good. I'm good. Other than this, this bear market, I'm feeling all right. But why don't you tell us a little bit about yourself and how you got involved in Bitcoin and kind of how you found it and how you got to where you are today.
Yeah. So I've been interested in investment since my late teens, mostly stocks. I first heard about Bitcoin in 2013. A friend told me about it. He wanted to buy it. And I was like, no, 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 that's a stupid idea. It's the stupidest idea I've ever heard. It's probably a scam. So he didn't buy it. And I didn't buy it either. And he is still angry on me for that. So during the summer of 2017, a lot of my friends started to buy. And I also thought that, okay, now it's time to buy some. The price then was like $3,000. So I bought some Bitcoin at $3,000, and then 1 month later it fell down to $2,000, and I panic sold everything. And and then during the bull market of 2017, later that year, the price hit like $20,000, and I had sold everything at $2,000. So when I saw all my not my smartest friends who had just held on to it. They earned a lot of money and I didn't, so I was really angry and I started to hate Bitcoin. So and the reason why I hated Bitcoin was because I missed the boat. So I understand the psychology of people who hate Bitcoin is often because they missed buying, and now they're just jealous of everyone who bought early. So then it went some years without me thinking about Bitcoin again, and I studied energy management in university. And on the side of university, on my free time, I was really interested in investments, but I felt that stocks had gotten really overvalued, so I sold all my stocks in 2020. And I had all this money in my bank account, and I started to think about where to invest them. I couldn't invest them in stocks. So and then this was in the beginning of when COVID launched, and I was sitting at home and I looked at this chart of the money supply going through the roof. And I had all this money in the bank, and I was like, I can't have money in the bank now. I need to find somewhere to put them. And until that point, I had really taking all the financial system completely for granted. I didn't think that it was so rotten as it really is. So when I saw this chart, I started to look into the macroeconomy and the state of the banking system. And one day it just struck me like this Bitcoin thing, which I bought in 2017 and then sold. Maybe it's a need for that. So in the coming months in 2020 during the lockdowns, I just manically studied Bitcoin and fell deep into the rabbit hole. And I had to write my master thesis in energy management that year. So I figured that Bitcoin mining uses a lot of energy. I study energy management. Probably I can write about Bitcoin mining. So I wrote my master thesis on Bitcoin mining. And after I was done in university, I got a job as a research analyst in Arcane Research. like crypto market research analyst, but I focused on Bitcoin mining, and now I just got a job as an analyst in Luxor, which is a Bitcoin mining technology company, and I also work as an analyst in Viridi Funds, which is a Bitcoin mining ETF provider. So what really got me interested in Bitcoin mining is my energy background, studying energy management, and I just think it's so fascinating that you actually can turn energy into money. That's so fascinating to think about. So yeah, I'm really bullish on Bitcoin, especially Bitcoin mining.
Yeah, and I think that's really interesting because, a lot of people when they go through academics, at least in the United States, I don't know how it is, in Europe necessarily, but the United States, a lot of times these academics when they go through energy and kind of like the whole process, I don't know if it's just a negative connotation that the politicians put on it or what, but there's always this FUD that, Bitcoin mining is kind of bad for the environment and, wastes a lot of energy and all that. So, as somebody with like an energy background as yourself, do you have any colleagues or anything like that kind of think that way? And how do you kind of approach that question and talk to people about that?
Actually, most people I've met in the energy sector are like they're not that bearish on Bitcoin. They don't hate Bitcoin like many politicians do. They're quite nuanced about it, but of course they're skeptical, and particularly now when the Bitcoin price has fallen to like 16, 17K, and that would make anyone skeptical. But yeah, in general, they're quite open to it, and I believe that we will see more and more energy people come into Bitcoin mining, and of course it's much easier for people from the energy industry to understand Bitcoin and especially mining because it's directly linked to energy, so they can understand it. And it's so many people from the energy industry that has gotten into Bitcoin through them understanding Bitcoin mining, and then they start to learn more about just the monetary side of Bitcoin, and they become Bitcoiners. So I'm quite bullish on it, to be honest.
Yeah, and I am as well, obviously. So, but I mean, I think it's interesting too because here in the United States, we have a big state of Texas, which is historically one of the more energy-rich states in the country, and it seems like they're very, very bullish on Bitcoin, especially when it comes to the energy and the mining aspect of it as well. So I always think it's interesting when a lot of these politicians kind of come at Bitcoin and say it's bad for the environment, it wastes a lot of energy. But we are kind of in an interesting place in the market right now where a lot of I guess there's a lot of outside factors kind of bringing in the price, and it's hurting a lot of Bitcoin miners right now because we've got a lot of things going on, obviously, in Europe with the Russia Ukraine. And then, we've got the FTX scandal kind of breaking down the Bitcoin price. So I feel like it's a very interesting kind of telling point for Bitcoin miners right now. So overall, I'm going to give you a really broad question here. Like, how is the overall health and like aspect of the overall Bitcoin mining industry? Obviously, it's a big, strong industry, and it's made quite a bit of profit last year. But this year, it seems like it's hurting a little bit because of the price. So, as somebody who takes dives into the research, how does it look to you?
Yeah, if it's one word to describe the current state of the Bitcoin mining industry, it's terrible. Oh, it's of course some Bitcoin miners have a stronger balance sheet than others, and also have much lower cost of production than others. So some miners are going to be completely fine and probably come out of this even stronger than they were before because they will be able to expand during the depressed prices we see now and maybe acquire some of their indebted competitors. But in general, the whole industry is going through a really, really difficult phase. And this year, 2022, has been the toughest year in the history of industrial scale Bitcoin mining. And there are four reasons for that. Like first, of course, is the falling Bitcoin price. Then at the same time as the Bitcoin price has fallen, the hash rate has just soared. And the third reason is the increasing energy prices. And then we have also seen the interest rates increase. So miners find it harder to make the debt service payments, and also to take on new loans which they might need right now. So to sum it up, the falling Bitcoin price and the increasing hash rate has led to lower revenues for the Bitcoin miners. And then the increasing energy prices and the increasing interest rates are also increasing the cost side. So miners are like hit from both the revenue side and the cost side. So the margins are just shrunk completely. And the best miners right now, the most cost efficient miners, they're operating at about, yeah, let's say 60-70% gross margin. So the Bitcoin price right now is 17,000, so they probably can produce a Bitcoin for, let's say, $6,000-7,000. So they actually earn quite a good spread on the Bitcoin production. But there are a lot of miners who pay relatively high energy costs, and they are barely making any cash flow right now. And then when you have the huge debt payments to make each month, and you don't have the cash flow to make these debt payments, that means that you have to drain your existing liquidity, the cash reserves, and you have to sell the Bitcoin to get cash to pay the debt payments each month. And when those run out, you have no other choice but to either try to raise equity, which is really, really hard in this environment. And that means that the last point is to declare bankruptcy. And we have seen Core Scientific, they announced that they actually might have to declare bankruptcy because they're running out of cash. Argo Blockchain, they had a similar announcement, because they needed to raise equity from some investors, and they couldn't do it. So then the share prices plummeted by like 70%. And yeah, so in general, the most indebted Bitcoin miners, who also didn't secure their energy prices, they are in big trouble now. But those who have little debt and have long-term fixed price power purchase agreements, hedged electricity prices, they are in pretty good shape.
Yeah, and it seems like a lot of the ones that were kind of, I guess, are in bad shape right now, uh, kind of were buying Bitcoin, or kind of over leveraging when Bitcoin was around the 30K, and then the rise up to the 60K price. So, I guess, how do Bitcoin miners, get a little bit better suited going on into the future? Because it seems like, this, maybe we had 50 or so publicly traded Bitcoin miners before this bear market started. And, it looks like that number might even cut in half, or get like pretty close to that. So, how do we kind of look at the miners that are, stronger balanced for this, especially going into the next bear market? Because it seems like, when everything's going well and the Bitcoin price is ripping and going up, everybody's kind of, at least on Twitter, applauding these mining companies for, taking loans against their Bitcoin, or taking loans against their machines, which are obviously a depreciating asset, and then kind of using that debt to, try to increase their business, and take some of those risks. And obviously, as such a volatile asset as Bitcoin is, at least right now, that is a bigger risk than than a normal company kind of taking, a loan against their assets. So, how do we kind of, I guess, look at and analyze some of these balance sheets in order to see, especially during the next, potential bull run, the ones that are best suited for, the next bear market?
Yeah. So first of all, I don't think most Bitcoin mining companies, especially the public ones, were prepared for a 16K Bitcoin price. At least I was not prepared for it. I always thought that 20K would be the like minimum floor here. So I kind of understand that they took all this risk. because they didn't anticipate that market conditions would be this bad. It was kind of a black swan event of everything going against them at the same time. But I think Bitcoin miners will learn from this, or at least they should learn from this. There will always be some who don't learn from this. And the main learning point is to improve the sophistication of risk management for these companies. They will need to have a very sophisticated balance sheet and risk management strategy, which takes all factors into account: how much Bitcoin they hold in relation to the rest of their assets, how many Bitcoin mining machines they hold, like how exposed they are to the Bitcoin price. Because the name of the game in 2021 and beginning of 2022 was just to increase your exposure to the Bitcoin price as much as possible. And so these companies actually wanted to be really high beta, you can say, Bitcoin investments, because that's what shareholders wanted. So they took on loans on their Bitcoin instead of selling the Bitcoin to pay energy costs. Some of these companies took on huge loans collateralized by their Bitcoin positions, and used this money to pay for operating expenses. Taking on such loans backed by Bitcoin or backed by machines, which are extremely correlated to the Bitcoin price, only makes the miner more leveraged long Bitcoin. So and to build a sustainable business that can last for decades, I think it's not that wise to try to increase the leverage on the underlying commodity that you produce. For example, oil producers, they are not hodling oil. Their focus is to make a margin on the price of oil and the production cost of that barrel of oil. If they can make a good margin there and have lower cost than their competitors, they have a very sustainable long-term business. And the name of the game in the oil industry is to reduce your risk to the underlying commodity as much as possible, because they will always be long oil because they are producing oil. So they're trying to reduce this like long exposure to oil. And I think we will see the same in the Bitcoin mining industry. Of course, it's much better to hodl Bitcoin than to hodl oil, because in the long term, oil is not really destined to increase in price, which Bitcoin is. So I'm not against Bitcoin miners hodling Bitcoin, but I just think they need to just reduce their Bitcoin exposure just a little bit, so that they will not be that vulnerable if the Bitcoin price falls like it has right now.
But then, I guess how do Bitcoin miners kind of balance that? I mean, obviously it's very difficult, right? Because like you said, you didn't anticipate seeing Bitcoin get down to this low price, and neither did, I'm sure, many of the mining companies as well. So, I guess, is it just kind of one of those situations, like prepare for the absolute worst
Yeah.
kind of thing, and have like, a bunch of reserves for, multiple years. And on that note too, then I guess, why hold Bitcoin then and not just hold all cash?
Yeah, I'm also against just holding cash, because of course cash is one of the most depreciating assets that exist. So that's not too good either. And also the shareholders of these miners will not accept that the miners just they raise a lot of money from shareholders and just keep them in the bank account. Of course, if a miner has cash, they should invest this cash. So that's not it's not really favorable to hold this cash either. So that's one thing that goes in the hodling Bitcoin favor, because a miner should have some reserves for the bad times, and the only way for a miner to have these reserves is actually to hodl Bitcoin. So you see now the public miners who held on to the most Bitcoin, they're also the one who has the strongest balance sheets right now, because if they really need, they can liquidate this Bitcoin and pay down their debts, or use this Bitcoin to pay for expansions, for example. So it's hard to say what is the optimal balance sheet strategy. I don't think there is one which is like really much better than the others, but I think each miner just need to think about how exposed there are to the Bitcoin price. Like doing some scenario analysis. If the Bitcoin price falls to $10,000, for example, what will happen to my company? Because at least in my head, the point of having a company is to have it for the long term and like build it up as a long-term sustainable business. And I know that that is hard to do, especially for public companies, which are more driven towards short-term thinking, because of course in stock investors are like short-term thinking investors generally.
Yeah, and I mean on that note too, though. So I think the low price right now is not good, obviously, for miners because they're losing on that margin. But what I think might be worse might be, just kind of floating around where we're at this price and really not showing any volatility, right? Where we'll kind of stay between this, maybe 16 to 20K realm. And if we're here for maybe an extended period of time, maybe even up to the next halving, or maybe even past that, and the hash rate kind of keeps increasing, how is this mining industry going to be affected? Is it going to be one of those things where maybe a big oil company like a Shell or an Exxon Mobil, who's just using the fracking from their oil runoff to mine Bitcoin, and they don't really care about the price. They're just happy that they're making money on lost energy. Is that going to be kind of the future? Or, do you think there's still going to be some space for some of these miners who, just still that's their main source of revenue is just Bitcoin mining specifically?
With a Bitcoin price at the current levels, the most Bitcoin mining companies don't make that much money. So if the Bitcoin price stays at the current levels for an extended period of time, let's say until the next halving, we will see those with relatively high debt service payments to make each month. They will eventually run out of cash and go bankrupt. But then we will see the companies with strong balance sheets who don't need to make these debt payments. They will thrive, and they can potentially buy the assets of these struggling companies. So, but of course, for the entire industry, it will be really hard to have the Bitcoin price at these levels. So and that also makes it more possible for these energy companies to come in and potentially purchase a huge struggling player just to get the machines and some infrastructure there. And if that happens, I don't think that the energy companies, let's say Shell, for example, if they had the possibility to buy one of Core Scientific's facilities, I don't think Shell would operate a Bitcoin mining facility in the middle of Kentucky. I think they would move the machines to their site, to their energy source, to their natural gas sources, and they would mine Bitcoin directly at the energy source. So that's the thing, when the energy companies enter Bitcoin mining, they will most of the Bitcoin mining capacity will move directly to the energy source, like right next to the hydropower dams, right next to the wind farms, right next to the natural gas, the oil well that produces also natural gas. There will be some grid connected miners also, but they will provide these demand response services to stabilize the grid. And there might be some energy companies that could be interested in buying, for example, a Riot, for example, which is huge in Texas, and providing all these demand response grid stabilization services, which are really necessary for that grid. But once again, Riot is really strong, so I don't think they will not survive this bear market. It's just an example.
Yeah, for sure. And so, on that note, we've kind of talked about a lot of companies that have exposure in America. But what worries me now is what's going on kind of in Europe with the Russia-Ukraine conflict. Obviously, in Germany, they're having the potential of an energy crisis. So, are the miners in Europe with a lot of that exposure, rising energy costs? I know at least from some of the publicly traded mining companies, the CEOs and mining officers that I've talked to here, they say that they have like a contract with a lot of these energy companies to, X amount of cents per kilowatt hour for a certain period of time. Is that kind of the situation with a lot of the miners in Europe? And if not, how bad is it going to be when these energy prices just keep fluctuating and kind of increasing over there?
Yeah, so that's an interesting question because right now there is basically no mining in Europe on the like continental part of Europe. There's no mining. There was a little bit mining there. Like energy prices have always been quite high in Europe, but in 2021 the profitability of Bitcoin mining was so high that it was actually profitable to mine even in Germany. So you had some mining in Central Europe, but now after the Ukraine war started and energy prices just going through the roof, all the mining operations have been forced out of Europe. And even if you had a long-term power contract in a fixed price power contract in Europe, I wouldn't feel safe about that because energy has become so politicized in Europe that for a miner to sit in the middle of Germany and just use tens of megawatts for Bitcoin mining while the normal German the people are freezing freezing to death. I don't think that would be too popular, and I don't think I wouldn't be surprised if they just remove this power contract. It was not allowing them to have such power contracts. So in Europe right now, no mining. If we go a little bit north in Europe, I live in Norway. We have a lot of mining in Norway and northern Sweden, and also Iceland. So basically, the most remote places in Europe have some Bitcoin mining. And the reason is that northern Norway, northern Sweden, and Iceland are not that connected to the European grid. So the grids in the most northern part of Europe, the most remote parts, are really isolated. So therefore, we have a lot of mining here. Like the electricity prices in northern Norway are among the lowest in the world right now. So we have seen a huge ramp up in mining capacity here over the last couple of years. And the interesting thing about Norway is that the southern part of the country is very connected to the European power market. But between the southern part and the northern part, there's barely any transmission capacity. So you have about 20 times higher power prices in the southern part than in the northern part. So all the miners that previously operated in the southern part before the European energy prices went through the roof, they now moved to the northern part. So yeah, that's what's happening with the mining situation in Europe. No one are mining in Central Europe, but a lot of miners are operating in the northern parts.
Yeah, so do you kind of see, I guess, now I want to bring it to the at-home miners because I think this is kind of interesting. Obviously, it's advantageous to mine Bitcoin, get those KYC sats, KYC free sats, and kind of do it that way. But it seems like with the increasing hash rate and energy prices, like we were saying, even for in the United States, if you're not getting or you're not using a ton of energy, it's pretty hard to negotiate with some of these energy companies to get a lower rate. And so you might be losing money. And obviously the home miners, it's not exactly like easy to maintain if you're not really tech savvy or anything like that. Obviously they make a lot of noise. They give off a lot of heat. Maybe the heat could be good and can be used in places like, where you're at. But, do you kind of see, I guess, the future of home mining kind of going down the toilet here? Just because of, the rising costs of maintaining the machines and even mining in general?
Yeah, I wish I was more bullish on home mining than I am, because I think long term mining will go towards an extremely low margin business, and you will have to have basically zero energy price to mine Bitcoin profitably. And no one has zero energy price at home. So maybe someone will want to mine Bitcoin at a loss, but I wouldn't want to do it even to get this KYC free sats, which we all love. Um, I was actually looking, like in Norway right now, in northern Norway, the energy price, like I think long term you could expect an energy price of about um, 4 cents per kilowatt hour. And the break-even price for an Antminer S19J Pro now is around 8 cents. So theoretically, you could make a 50% margin just by home mining. But you have to remember that you have all these other fees on top of your energy cost. You have the transmission fees, you have the distribution fees, you have the energy tax. And so in the end, you will, even if you operate in the cheapest grid in the world, which is northern Norway, you will barely break even if you mine at home. I was actually running the calculations because I was considering to buy some miners myself and mine at home. But I found out that the payback period of these miners, I would have to mine for like 3 years, something like that, to get back my investment. And that's it's not the end of the world, but it's still too high for me. I want to make, like, I don't want to mine Bitcoin only to get the KYC free sats. I want also to get some return on my investment, and I think that will be really hard for most home miners. But that being said, if you repurpose the heat from the operation and you really need heat for something, then it can be profitable. If you, let's say you have a pool in your garden that needs to be heated, yeah, then you can, why not just heat it with the heat from the Bitcoin mining machines? Like if you're going to reuse the heat and use the heat 2 times, then I don't think it's a bad decision to mine Bitcoin even with at a loss, a small loss.
Yeah, and I think, it's going to be more advantageous for people to kind of use that runoff energy, maybe get a little bit more creative with how they use that. Whether it's, like you said, like using it for heat of a home, maybe maybe a hot water heater or something like that, hot tub. I've heard a bunch of different creative aspects of that. So I think like that might be the future, I guess, for the at-home miner. Maybe getting to a point where companies are just kind of setting up these home miners to help heat, different aspects of a home or whatever entertainment place or what have you. And the company's just essentially just earning the profit of the Bitcoin miners, and the people not even knowing really it's there. So is that kind of like, are you seeing a lot of that innovation kind of start? I've heard some rumblings here in the US, but I don't know if like you guys are really experiencing it there. And I'm also in Florida, so it's hot year round here, so I don't really get too many people, using the heat runoff as maybe you might up in Norway.
Yeah, I see a lot of innovation here, and it's all really started. I would say, yeah, I would say the real innovation in heat recovery from mining started in the end of 2021 and beginning of 2022. We see like all miners in northern Norway, for example, are at least planning what to do with their excess heat. I've heard, and some are building greenhouses. Like I know in northern Sweden there are at least 2 huge greenhouses that are heated by Bitcoin mining machines. In northern Norway, I know a company building a massive greenhouse. I think it will be one of the biggest greenhouses in Norway, and that will be heated by Bitcoin mining, and they will grow tomatoes there. And what is really interesting about that is that building such a huge greenhouse in northern Norway, where it's really cold, wouldn't be profitable without the heat from the Bitcoin miners. So they get free heating, and this creates also a lot of jobs in the greenhouse. So the Bitcoin mining operation itself might have like 10 jobs or something, but the greenhouse might have like 20, 30 jobs. So you can actually create a lot more jobs, which will make your position in the local community much stronger. And that's really valuable now when we have some politicians in Norway who like talk about banning Bitcoin mining and all that. It's much harder to ban Bitcoin mining if you, by banning it, you remove a lot of jobs, because it was like a lot of other companies relying on the heat from this business and all these things. So yeah, you have the greenhouses. I've heard some miners talking about creating a spa in northern Norway. That's really creative. You could also like distill whiskey with the heat from Bitcoin mining. There's a company in Canada called Mint Green, which is doing that. You could heat cities with Bitcoin mining. You can have you can use the heat for all kind of purposes. And I think we're just recently starting to see the innovation there. And I'm just really bullish on this. In 5 years, I can imagine how far this technology will have come.
Yeah, and I think that's going to be the interesting part. It's kind of like what I alluded to a little bit earlier. Is a lot of these companies, that start mining Bitcoin or using Bitcoin miners aren't going to really look at Bitcoin mining as their like main source of income. And that's where I think like we're kind of seeing a lot of these Bitcoin miners falter right now, because that's their main source of income, their main revenue, whatever, main business. But a lot of these other companies and innovations that we're seeing around the space are, to utilize the heat for something else, right? So it's like, or utilize runoff energy in order to mine Bitcoin. So, personally, that's kind of where I see the space going. Do you kind of see the same thing, or do you still think there's going to be space for companies that just strictly mine Bitcoin and that's it?
I think Bitcoin mining is such a cutthroat competitive industry that in the future, if you're going in the long term, if you're going to survive, you need to have basically a zero energy price. And that means that grid connected miners who just connect to the grid somewhere and build a warehouse and just mine Bitcoin, I don't think they will be able to survive in the long term. So like some grid connected miners might be those who provide these demand response services where they get paid to shut off their operations in times of surging energy supply, no energy demand. They might be able to mine Bitcoin because these payments they receive are so reduce their overall in power cost so much that it's still profitable. But you will have to reuse the heat in some kind of way, like to sell the heat to someone, or you will have to use basically wasted energy. You will have to use the energy directly at the site. That's why I think in the future the operations will migrate away from just connecting to the grid somewhere to hydro power plants, to the wind farms, and to the natural gas sites, and to the behind the meter at the nuclear power plants, because to reduce the energy cost as much as possible, the best thing you can do is just to reduce the transportation cost of that energy. You should, if you move your facility directly to the energy source. Okay, let's take Core Scientific's example again in Kentucky. If they just have a facility in the middle of Kentucky, which are not that close to any power plants, I don't know the exact grid mix in Kentucky, but let's say they use natural gas. First, the natural gas power plant has to get the energy from the natural gas site. It has to go in pipes to the power plant. that costs money. This pipe costs a lot of money. Then the natural gas power plant need to generate electricity and send this electricity through transmission cables to a substation that reduces the voltage of this electricity and then goes into the machines of Core Scientific. That's a lot of energy lost in this whole process, and a lot of money spent on all this infrastructure required, all these cables and pipelines required to take the energy from the natural gas site to the facility where it is actually being used. So I don't see this like grid connecting. The miners have such a great future in the long term. I think they will have to be really creative to lower their energy cost, and of course the best way to do it is to go directly to the site where you have the energy. And as I said, the other way to do it is to just reuse the heat of the operation.
Yeah, exactly. And I think like people are going to be more creative as time goes on. So, but as far as obviously we've talked this entire time about the Bitcoin mining space, but a lot has gone on the side of Bitcoin, right? So we've seen FTX, a lot of like outside kind of FUD has come around the entire space. So, for people and like friends, family that understand, that you work in Bitcoin mining, whatever, but don't really have a general understanding, I guess, of the entire space. And they see things like this, with FTX and all this other, garbage that's going on. What do you kind of tell them to kind of, I guess, like lead them down the path that like, hey, like, FTX is not Bitcoin and all that kind of stuff?
Yeah. I try, for example, I can use the example of my brother who is kind of he's into Bitcoin, but he's also a little bit into crypto. I'm trying to get him like to understand the real difference between Bitcoin and the rest of the crypto industry. And of course, for me, it's easy to see it because I've been in the space for like a few years now, and then I think it's impossible to not see that it's really big differences between Bitcoin and like crypto. But of course, most people on this, if you find a random person on the street, they will not understand the difference at all. So it's actually make me a little bit embarrassed when like people ask me about this FTX thing and all this. But I just explain to them that this space is so novel that there will be a lot of scammers coming into this space to exploit people who don't know anything better, and to try to take their money. And that's what I really think most of the crypto industry is. I think um, it's just not everything is an outright scam, but I think it's like a lot of get rich quick schemes where people really don't believe in what they're building, and they're just building it to get rich and then dump it on the retail. And yeah, I'm just trying to explain the differences between Bitcoin and the rest of the crypto industry. So yeah, that's what I do.
Yeah, yeah, I know. And it is a tough time for Bitcoiners out there just because of all this stuff that's going on, exchanges shutting off withdrawals and kind of just the overall it seems like companies are kind of falling like flies. But, what makes you most bullish about the Bitcoin industry going forward? I know we both said here that we both very are. So, what is that one thing that you see or you can point at that's like, hey, this is why I see that Bitcoin's going to make it?
It's just a simple fact that no one can stop Bitcoin, and it's just a entire industry, or like the industry is not that important. Of course, you need to have some infrastructure around Bitcoin to make people adopt it, but that's just coming. It's like everything is just falling into its place naturally with Bitcoin because it's a decentralized asset. It's like the most free market that exists, and I believe in free markets, and I see how much that fosters innovation in the like infrastructure around Bitcoin, for example the Lightning Network. And so I believe Bitcoin will just survive, and it will survive. I don't know how long, but probably until the end of civilization. And just by it surviving, I know that it will like gradually increase in adoption. And you can look at, for example, graphs over or charts over the number of Bitcoin addresses or like things like that, and it's just increasing. Um, so I think Bitcoin adoption is at an all-time high even during this bear market. That's make me really bullish. So fundamentally, I think things are just going up for Bitcoin, and I don't think this FTX situation and all these crypto scams imploding, I don't think it's necessarily a bad thing for Bitcoin. I actually think it can be a good thing because this is really hurting the crypto industry, and I would like to see the like entire crypto industry just go away and stop like they're like hanging on to Bitcoin. They're like just, I don't know, they like they would be nothing if it wasn't for Bitcoin. So it's Bitcoin which is like driving the whole like industry forward. So yeah, I'm actually of more bullish than I've been in a very long time right now.
There we go. I love to hear it. All right. Well, you've been very generous with your time, and I appreciate you coming in and sharing all your knowledge on Bitcoin miners and everything kind of around that space. So why don't you tell everybody where they can find you and what you got going on?
Thank you. It's been a great conversation. So you can find me on Twitter, J Mellerud, JMELLERUD. And you can also find me at hashrateindex.com at the blog there. I write a lot of blog posts about Bitcoin mining. So if you're interested in mining, which I guess you are since you listen to this podcast, just go to that and listen to and read my blog posts.
Yeah, for sure. And be sure to check those out because they're great. And I know you follow you on Twitter because I know you tweet out a lot of the charts and everything like that when it comes to publicly traded miners. And those are always interesting. So that's what caught my eye with you. And that's why I wanted you on the podcast. So great stuff as always. And yeah, be sure to check him out and give him a follow everywhere you can find him. So Jaran, thank you so much.
Yeah, thank you, Brandon. Great conversation.